Hey everyone, welcome back to the channel. Today, we're diving into Microvast Holdings, ticker MVST, a company that's been making waves in the electric vehicle and energy storage battery space. If you're an investor or just curious about the EV revolution, you've probably heard of them. But what sets MVST apart? What are their advantages in this crowded market? And with tariffs looming large, especially in 2025, are they positioned to dodge the trade war bullet with their manufacturing strategy? Stick around as we break it all down. Advantages, manufacturing, and what it means for their stock. Let's get started. Founded in 2006 and headquartered in Stafford, Texas, Microvast is a battery tech innovator focused on lithium-ion solutions for electric commercial vehicles, like buses, trucks, and trains, and utility-scale energy storage systems. They're not your typical battery company. Unlike some competitors who tweak old tech from consumer electronics, Microvast started from scratch. Their founder, Yang Wu, wanted true innovation, not just adaptation. That means they design everything in-house: cathodes, anodes, electrolytes, separators, even cooling systems. They've got a range of chemistries, like lithium iron phosphate and nickel manganese cobalt, tailored for heavy-duty use. Revenue's been climbing, $306 million in 2023, up nearly 50% from the year before, and they're finally profitable, posting $13.2 million in net income last quarter. But it's not all rosy. Their stocks had a wild ride, hitting a 52-week low of 25 cents recently. Microvast's ground-up approach gives them flexibility. They're not locked into legacy designs, so they can adapt fast. Think next-gen solid-state batteries or silicon-based cells they're working on. This R&D focus could open new markets, especially as EV demand grows. Analysts predict the global EV battery market could hit $300 billion by 2030. Their latest quarter showed a 33% gross margin, up from 22%, thanks to better capacity use and lower lithium costs. Compare that to peers like QuantumScape, still burning cash with no revenue. MVST's already delivering, with $400 million in annual revenue, yet its market cap's just $490 million. That's a steal compared to, say, Kohler, with $10 million in revenue and a $420 million cap. Over 97% of their revenue comes from Europe, Middle East, Africa, and Asia-Pacific, and only 3% from US. This diversifies risk. They're landing big clients, like electric buses in Europe or mining trucks in Asia. That's a solid foundation. But here's the kicker. With tariffs heating up, does their manufacturing setup protect them? Let's dig into that next. Now, tariffs are the big question in 2025. With President Trump pushing 25% duties on Canada and Mexico, and even 50% on steel and aluminum, trade wars are back. For a battery company, that's a big deal. Raw materials and components could get pricier fast. So, is MVST tariff-proof? They've got what I'd call a split manufacturing strategy, but it's not a silver bullet. Here's the setup. Microvast's main production hubs are in Huzhou, China, and Germany, with a new facility ramping up in Clarksville, Tennessee. The China plant's their workhorse as most batteries roll out from there, using parts sourced globally, not just the US. Germany serves Europe, cutting shipping costs and dodging some trade barriers. The Tennessee site's their US play, aiming to tap Buy America rules for government contracts. Split production across continents should spread risk. But here's the catch. They're not fully tariff-proof. Most raw materials like lithium or cobalt aren't sourced from the US, and Tennessee's not online at full capacity yet. If tariffs hit imported components, costs could rise. Plus, their products might not qualify as domestic origin under strict US rules, limiting sales to grant-funded clients like transit agencies. Compare that to a rival like Enovix, with more US-centric production. That is MVST's global supply chain's a strength, but also a vulnerability. That said, their 97% international revenue cushions the blow. US tariffs won't gut their core markets in Europe or Asia. Analysts at H.C. Wainwright argue this insulates them from Trump's trade policies. Still, if China retaliates or global supply chains snag, it's not all smooth sailing. So, split manufacturing helps, but it's not a full shield. Here's a breakdown of their key innovations based on available information. Ground-up battery design. Unlike many competitors who adapt existing consumer electronics battery tech, for example, for laptops or phones, Microvast builds its batteries from scratch. They design every component in-house: cathodes, anodes, electrolytes, separators, and even thermal management systems. This allows them to optimize performance for specific applications, like heavy-duty commercial EVs, buses, trucks, trains, rather than relying on retrofitted solutions. Diverse battery chemistries. Microvast offers a range of lithium-ion chemistries to meet varied needs. Lithium iron phosphate, known for safety, longevity, and cost-effectiveness, ideal for buses and energy storage. Nickel manganese cobalt, higher energy density for applications needing more power, like trucks. Lithium titanate oxide, ultra-fast charging and extreme durability, up to 20,000 cycles, perfect for high use cases like urban transit. This flexibility lets them customize solutions, giving them an edge over one-size-fits-all competitors. High-performance battery packs. Microvast batteries are engineered for demanding conditions. For example, fast charging. Some packs can charge to 80% in 10 to 15 minutes, critical for commercial fleets with tight schedules. Long lifespan. Their designs boast up to 10,000 plus charge cycles, far exceeding typical EV batteries, often 1,000 to 2,000 cycles. Thermal stability. Advanced cooling systems reduce overheating risks, enhancing safety and performance in extreme climates. Next-gen research, solid-state and silicon anodes. Microvast is investing in future tech. They're exploring solid-state batteries, replacing liquid electrolytes with solid ones for higher energy density and safety. While not yet commercialized, this could leapfrog current lithium-ion limits. Silicon-based anodes, swapping graphite for silicon could boost energy capacity by up to 10x, though they're tackling challenges like expansion during charging. These are still in R&D but signal long-term ambition. Vertical integration. By controlling the entire production process, from raw material processing to final assembly, Microvast can tweak designs quickly and cut costs. This contrasts with competitors reliant on third-party suppliers, giving MVST agility to innovate on the fly. Application-specific solutions. Their tech shines in real-world use. Commercial EVs, their batteries power over 30,000 electric buses globally, including partnerships with companies like FPT Industrial, part of CNH Industrial. Energy storage, modular systems for grid-scale applications, like stabilizing renewable energy sources, show versatility beyond EVs. Price action. Price skyrocketed in November from 17 cents after earning call, where they showed profitability all the way to almost $3 in December, rising more than 10x. But luckily, due to the market uncertainty and looming tariffs, prices dropped and found temporary support at around $1.50 that has given us an opportunity to buy. Though there is another support level at around $1. I will start to DCA at these levels. Due to unliquid option markets, I will be buying stocks.